Hi, everyone. Welcome to the 131st episode of the Timing Research Show for March 27th, 2017. My name is David Kosmeter. I'm the creator of Timing Research, and today we will be discussing the 183rd weekly report. So if you haven't had a chance to take a look at this yet, just go to TimingResearch.com/reports, and you can download this or any of the past reports there. I have Matt Buckley back to moderate today, so I'm going to go ahead and turn it over to him.
Awesome. Thanks, David. I appreciate it. Another opportunity to host a good group of 500-pound heads in the financial space. Really, I don't think we have a lot to talk about this week, right? Other than that, Mrs. Lincoln, how was the play? So we have a lot to talk about this week, especially based on the respondents' answers, especially question one there, just looking at it right on your screen, David, with 32% of the respondents saying higher and a whopping 68% saying lower. So we're going to get to question one here in a couple minutes and see what our pros have to say, vice our retail traders. So I'd like to welcome aboard Anka Metcalf from TradeOutLoud.com, Jen Kenney of TheOptionsProfessor.com, Kurt Capra from T3 Live, and Stefanie Kammerman from TheStockWhisperer.com. Folks, let's stick with that batting order throughout the day when I'm asking questions, and we can all jump in, obviously, back and forth and make it a roundtable. But let's kick it off with Anka. Are you down here yet, Anka? Are you down here in beautiful South Florida yet?
I'll be there in 2 weeks. Really looking forward to it.
Great, 2 weeks. It's a beautiful day out there behind me.
Countdown, exactly.
Oh, yeah. Going to be running out here on the beach here when we get done. So why doesn't everybody give us a little bit of an executive summary of your background, how you got to where you are, and currently what you do?
Hi, everybody, and thank you, David, for having me on the show. Hi, Matt. Hi, gang. Just wanted to let you know that I have been a professional independent trader focused on equities and futures for the last 14 years. Prior to becoming an independent trader, I have 10 plus years in investment banking. I'm also the founder and CEO of TradeOutLoud.com, which is a trading education firm that is specialized in educating individuals how to day trade and swing trade futures and equities. I also run a managed account program, and I'm being known as being the designer of an institutional proprietary trading system that is based on price support resistance, specific trigger times, specific price zones, chart synchronicity, a strict set of trading rules, and a 10-point scoring system that enable, first of all, myself and all of the traders that follow me to enable trades with ease.
Awesome. Great. Looking forward to you being down here, and might be giving you a call here because we're having a live event June 9th and 10th down in Miami. So
oh, awesome. It's right on my birthday.
Oh, really? Well, then we'll definitely do it. Great. All right, Jim, give us a little bit about your background. Good to work with you again, and let the folks know what you do, the Option Professor.
Well, at the Option Professor, we have 7 option learning DVDs that I was the content provider of. And basically what it is it starts out with the basics, goes into intermediate and then advanced strategies. And the DVDs cover both sides, the use and the risk of the options. And it goes over strategies where you're writing them to create cash flow, and strategies where you're buying them and trying to trade them, and also strategies for hedging, which is something that I talked about on March the 6th, last time I was on the broadcast. And we talked about how to use certain strategies like collars, particularly on some of the extended things that people might own, which would allow them to stay in the market for further upside, but also put a floor underneath their values. And on days that we've seen recently, having a floor underneath the values, particularly in some sectors, would have been kind of helpful. So lots to learn on those DVDs, and that's what we're doing.
Awesome, Jim. Welcome back. And Kurt.
Glad to be back. So I'm with T3 Live, and we offer a little bit of something for everybody, whether it's options, forex, equities, you name it. And we've got different courses based on those needs, different resources, whether it be a trading room community to get involved with, like I said, courses, even just some kind of just spreadsheets to help keep you updated with what's going on, nightly newsletters, etc. So, like I said, it's a little bit of something for everyone, mostly based on technical analysis, because what we believe is fear and greed move the markets, not anything else. So as long as you can understand what is driving the current environment, you can be well positioned and also have the peace of mind, which I know is a question that we'll get to here a little bit later, but have that peace of mind to know and be confident in the decision-making process you're going through.
Perfect, Kurt. Looking forward to hearing your views on where we're heading. And Stefanie, a little bit about your background and what you do right now.
Sure. Hey, Matthew. Thank you for inviting me back on the show again. And you guys, I started out in 1994. I knew absolutely nothing about the stock market. I think that's the best place to start out. But I started out in the $1 million room at Schoenfeld Securities in New York, which is the largest prop firm in New York. And they sat me in front of an Instinet machine. And if you've been around the block as long as I have, you know what that is. That's the first dark pool execution machine. And the dark pool is an area that I've specialized in since 1994. And it's really where all the big guys are doing the biggest trades. 40% of all the volume being done right now is being done in the dark pool. And everybody thinks you can't see it, but I have thousands of pictures posted up on Twitter every single day. And right now I am touring across the country. I'm a premium speaker with the New York Money Show and the Traders Expo. And I'm teaching as many traders as I can to learn about the dark pool. That's how I've spotted the last 11 corrections before they happened and posted up on social media. So what I do now is I run a live trading room. Every single day I'm there from 6 a.m., 6:30 a.m., sharing my screen, trading live, teaching hundreds of traders how to trade while the market's open. I think that's the best way to learn how to trade. I mean, that's the way I learned. I didn't know anything, and I sat next to the best traders who talked me through their trades and taught me where they were going to get in and where they were going to get out. And I absolutely love what I do.
Awesome. Sounds like it, Stefanie, and we're looking forward to hearing from you as well. Real quick, folks, I'm a visual guy, hate PowerPoint. So Matthew Buckley, my call sign is Whiz. You guys can call me Whiz going forward. Flew the Hornet for about 15 years through the United States Navy. Graduated from the Navy Fighter Weapons School, which many of you know is Top Gun. And obviously I had a big marketing department when I started Top Gun Options, copy paste. And also flew 44 combat missions over Iraq. Speaking about the F-18, I was in Aspen last week doing some skiing with my kids and bumped into Ivanka Trump and her husband, who they also made national news because I guess they wanted them home in the healthcare debacle. But we actually talked about the Hornet for a while versus the Joint Strike Fighter. And I got to tell you, bumping into somebody who was that it brought a tear to my eye that even, Donald Trump even knows how to say the word F-18 by some of the other people that we had in office. As I was flying the Hornet, taught myself about stocks, found out I was a chump for trading stops when I found out about options and never looked back. I applied everything that I learned flying the F-18, having a strategy, implementing tactics, managing risk, contingency planning, knowing when to get out of a bad situation before it got even worse, or actually even more to the point, knowing when to get out of a good situation before it got worse, and not being emotional about things, processing data and acting on that in split second and making the right decision. So that actually applied really well, obviously, to my trading. Ended up popping up on the radar of one of the largest volatility arbitrage firms in the country, Peak Six Investments. I was their managing director of strategy. I was there when I founded the Options News Network, ONN TV, helped build Options House. And yeah, I felt like Valentine in trading places. Trust me, going from pro-am to pro, it was a good time. So did all that stuff and decided that, no offense to anybody who's from Chicago, I think, Jim, you're still up there. Chicago winters are best left for people other than me, and decided to head down here to South Florida, where I started Top Gun Options in 2010. So we're going on 7 years in business. 2016 was our record year for our model portfolios because I was one of the only guys in the entire financial industry to not only predict a Trump victory, but a 5 to 10% Trump rally. When Goldman, Citi, Morgan were all saying Hillary's going to walk away with it, and if Trump wins, the market goes down 5 to 10%. So we really put ourselves on the radar with that call, and very, very happy with it. And we're actually going to talk about the Trump trade here in a couple minutes. So extremely fired up to have a good group of folks. So let's go. We'll do rapid fire, top to bottom, starting with Anka. On question one there, Anka, which direction you think the S&P is going to close from our open this morning, which is what we were down $1.50, and we're flat. I mean, we're flat on the S&P, but the Dow's recovered 130 points. So, Anka, when the closing bell sounds on Friday, what do you think we're going to be looking at, higher or lower?
Wow, that's such a great question, and I think everybody would love the correct answer to that, so they could just rush and just buy or sell everything. But here's the thing. Actually, I started looking at the market last night, and last night it was just selling off. I was looking at the futures, and there was obviously a lot of selling pressure going on into just about 2 a.m. Eastern time, when some of the European markets started to jump in. And then at 3 o'clock, we saw a little bit of reversal. And then the markets were still very, very weak at that point. We had a full retracement. We actually closed the gap and from this morning, and we're sitting pretty much flat, like you said. So here's the thing. If you would have asked me the same question this morning, right before the market opened, or even 30 minutes into the market open, I would have said, you know what, I think the market is going to head lower because there's a lot of relative weakness that is going on. We have had some signs of topping out. We've had the failure of the healthcare reform, and we have another cloud that is hovering right now over our heads with the tax reform that is going to come, I think, in probably 4 to 6 weeks, if I'm not mistaken. So I'm a little torn on this one. I think we have a 50-50 shot of going higher or lower. And the reason for that is that I think that the S&P right now is on support. The way I see it right now, I have a daily chart right in front of me, and it's just sitting on that 50-period moving average from which it bounced slightly. I think the line in the sand is going to come over the test of 2360. If we break above that 2360 area, that is going to be the first clue, as for us technical traders, that the market will be ready to take on the prior highs. But if we break below by Friday, if we break below the 2325 level, we're definitely going to head lower. So I'm 50-50 torn on this one. I think that we should take it like one day at a time. And to be very honest, I am in very few positions as of this moment, as I'm a swing trader, also a core trader. I only have one core trade going on right now, and a couple of swing trades that I have that are literally unique trades. And then the fact that they're moving aside from the market, so they're not looking what the market is doing, they're trading on their own, I'm going to leave them alone. But other than that, I think that, in my opinion, we have a 50-50 shot going long or short at this point.
Okay, 50-50. So 50. There you go, 0.5 delta that we're going higher or lower. Or the coin might land right on its edge and we're unched, which seems very unlikely. Jim, okay, I don't know how you can top that, man, but give it a shot.
All right. Well, my opinion on it right now is that obviously we gapped down and that we had a bounce back, just like she was saying. But I've been saying that the overbought conditions that went and took the transport and the Russell back down pretty sharply. Those ideas there are letting me feel that we could roll over to the downside after we go up towards 2350, 2360, and then roll down from there. Reasoning is that the Fed was kind of dovish during this last meeting, and yields are dropping. And a lot of the numbers that are coming out this week, if they don't come out very robust, then I think that everyone is taking a little bit of the risk off here in the banks and in different sectors that ran up, like the transports and the Russell. So I'm thinking along the lines that we go up towards 2350, 2360, and then these numbers as we go into the week on the consumer, on real estate, and on manufacturing, et cetera. If they're a little bit weaker or less robust, then I think we can roll back down. We penetrated the 50-day average today at 2322. It currently is at 2330. So at least it's trading above that now, which is a positive. But I am still suspicious that the numbers this week will be a little bit soft. And ergo, if they are, it would be reasoning to try to go a little bit lower by the end of the week.
All right, so you're saying...
and my confidence level on that is about 0.6.
All right, 0.5 delta to a 0.6. So you're saying we might get back up to, because all the technical level last week, the journal almost on the front page, 2350. The level to watch was literally the headline. It said 2350. So you think we're going to head up to that, test it,
and
then
then roll over. And again, like I say, the transports and the Russell having a more significant correction than we've seen in the S&P is the thing that's got me going a little bit, as well as the enthusiasm. We're going to start getting numbers now, and some of the numbers, if they don't confirm, to go along with the healthcare not happening. And then some people are saying that the corporate tax was going to go down to 15%. Now they're saying maybe 20 to 25%. So a lot of things are changing, and maybe we've come just a little bit too fast, too far, and that would indicate maybe we could, meander down a little bit here.
All right. So initially higher, but closing lower with this 0.6 delta. Kurt, what are you thinking there at T3 Live?
I'm going to say lower. Just based on, and I think there's a lot of dynamics going on here. Obviously, not just from what Jim just mentioned, economically speaking, but even just looking at the different markets. You got the Qs, which are still holding on support. They've yet to break any key support level, although they have lost the 20-day moving average last week. And then you got the Russell, which actually poked below some more significant support last week with that sell-off on Tuesday. So, and then the S&P is just somewhere in between. And so I think that's really the bigger issue, is just the divergences we're getting here in the various markets. But having said that, I do think the S&P needs to correct a bit more. And quite frankly, you look at the weekly chart, and if it were to pull back into the range where it broke out from around early February, that wouldn't be the end of the world for a longer term move higher. So I'm going to say lower.
Lower. What's your delta on that?
Until proven otherwise, gotta go 100%.
Ah, there you go. You never do anything unless you're 100%. All right, Stefanie.
Hello there. Can I share my screen?
Absolutely.
Oh, fantastic. I'm surprised nobody shared their screen yet. Okay.
Well, we haven't gotten to me, Stefanie.
Oh, okay. By the way, I love your PowerPoint. That was fantastic. Love those pictures.
Took 10 minutes. Yeah.
All right. So can you see my screen now? Yeah, I think you can. Okay, great.
Got it.
All right. So I have been
see all 80 of your screens.
Great. Good. As long as you can see my P&L, it's good. So we've been bearish. I've been short the SPY. Well, first I started with the Russell and then the SPY, especially going into this morning, because the SPY broke down below a massive dark pool level, $236.55. Okay, that was a massive 50 million dark pool level. We haven't had a level like that since 2015. So my entire room has been short the SPY, and it was a great trade going into this morning. Now I just want to show you the dark pool prints that are coming in today at $233. Let me see if I'm going to zoom in on this. And 81 cents, 503,000. We've gotten just a couple of those. We probably will get some more of those coming in, but that is the magic level. That's why the SPY just went all the way up there and stopped like a brick wall. So that's going to be a key level that I'm going to be watching to see if we close above or below. IWM, the Russell ETF, we had dark pool levels at 134.50. You can see them on my block trade indicator. This has dark pool data feed. This is from Charles Schwab. Most people think you can't see the dark pool because they just don't have the right software. But Charles Schwab has a block trade indicator, which I've set up, and it has dark pool data feed. So I see these are late sell prints that were done on Friday, and they didn't give it to us until today, but we always test these levels, a very popular pattern. So as you can see, we came right up to that 134.50 level and pull back. So these are key things. Now, as far as what do I think the market's going to do this week? Well, I can tell you next week, I'm more bearish than this week. I can see us maybe staying up in the zone, and then next week around April 5th, I could see us moving down lower on the SPY to about 229.17. Let me just pull that up here. Okay, till about this 229, around 230 level. But we may go up a little bit from here before we come back down there. But again, I don't guess where the market's going to go. All I do every single day is just follow the big guys. I can see their trades. I see where they're buying. I see where they're selling. So we don't have to guess what's going to happen. You know, everybody thinks that the Trump rally, this big rally we've had, was because Trump got elected president. And that's not true. I can show you proof that the dark pool was buying November 4th and hiding their orders until November 7th. And that was before the election. So it really wouldn't have mattered who won the election. It would have been the Hillary rally, except I think there was definitely some anger in this rally. People were pissed off the market was going up, so they started shorting it, and that created, you know, a more of an exuberance in the rally, shall I say. But that's my calls going forward.
So up this week and a rollover next week is what you're saying?
Correct. I see a rollover next week.
And that's purely technical, or the dark pools, or what else are you looking at?
Yeah, it's all technical and dark pool trading.
Okay.
I mean, we could go down this week, but that's my level. I'm going to watch these levels moving forward again. Watch that 233.81 level. That's key. Yep.
All right. The best part, as usual, of me going last is that you're all wrong. So let me take a swing at it. At TGO, I call this white space out here. I love to write in this white space to the right side of this chart. Nobody knows what the right side of the chart looks like. I don't care if you're a chartist, a flutist, a Fibonacci reversed with an iron condor twist person. I don't care. Unless you're Nostradamus, you don't know what's out here. What is out here, though, is North Korea, Iran, Russia, and Trump. And obviously, this implosion was the knee-jerk reaction to, oh my God, he couldn't get health care passed. Well, the guy's an idiot for a couple reasons, but trying health care first, it's like that, Barbie, math is hard. Well, healthcare is hard. At least he could have gotten some bipartisan support with tax reform, because even the liberals and the Democrats are starting to wake up to, especially in the Republic of California, when you squeeze rich people and corporations really tight, they split. So even the Democrats would like some of that money back. So I think this rally does hinge on that 50-day moving average right there. And who was it? JP Morgan just came out with a great, this is on Zero Hedge, but it says, hey, until market abandons hope for tax deal, there will be no significant weakness. I completely agree with that. This is a Brexit moment, folks. The Brexit, well, I told my traders, I said, folks, the Brexit's it'll be over in 3 to 4 days. Next week, we won't even remember the word Brexit. I was wrong. It was over in like a day and a half. The market rebounded and we were back off to the races. So, and we also, like I said, we predicted the election. We predicted this hope and change. I call it a hope and change rally, folks, as opposed to the last clown. This is the hope rally. And then we're going to stagnate here until we know shit, see some change. And the change we saw last week was Paul Ryan sucks. The Freedom Caucus Republicans, rearranging deck chairs on the Titanic here. Nobody cares about that anymore. Who was it? The CIO of, what was the hedge fund over the weekend? He's like, nobody cares about healthcare except poor people or something like that. It was really this let them eat cake moment. I'm like, oh my God, that guy said that. He's right. He's Gordon Gekko. Trump's like, I don't care now. He could go up on a hill outside of DC and point to the Beltway and take a picture like, I tried, man. They suck. So if we're going to have another failure and it's going to be on taxes next, it's over with, folks. The market goes to zero. So I think we're already done with healthcare. The fact that we gapped down 150 points on the Dow and now we're essentially flat is redonkulous. And the S&P's flat right now. I do have a lot of hedges out to May or the end of April and May there. But folks, I think we head up. Nobody cares about healthcare, to be honest with you. I don't anymore. I get it as an American. It was a shit sandwich that got shoved down our throats with the Nancy Pelosi. We got to pass until we see what's in it. At least 40 or whatever Republicans said, hey, we're not going to vote for it because it still sucks. At least they did it on principle. So we're done with it. I don't think we break this 50-day moving average. If we did, we would have done it. But if we do it with any sort of airspeed to the downside, it is over. And yeah, I think Stefanie started talking about some levels down here, which she's probably right. But this is the And Anka, as you said, man, this is a day by day, minute by minute to see literally my Skype's going off, my texts are going off. Everybody's kind of looking around the room going, hey, what are you doing? Well, we getting ready to stampede or yell fire, or do we just get out of here and then yell fire while all the retail traders are in here and they all get stampeded? So I'm actually going to say we go higher this week. I think we bounce off this 50-day. I think Trump is going to, he's already got an enemies list on the healthcare thing. He will get tax reform passed. Steve Mnuchin doesn't need Congress to gut Frankendodd and help out at Goldman Sachs or JP Morgan. So I think Wall Street still gets helped out. I think JP Morgan and Goldman Sachs are gifts down here. JP Morgan below 90 and Goldman, around 222-ish or something like that. So I think we go higher, and I'm 100% higher or certain that we go higher. So everybody can suck on that.
Well, hey, Whiz. Yeah, one thing that might add some credence to your view is the VIX went as high as 15 and 11 today, and now it's at 12.95. So it is starting to smell a little bit like a blow off to the downside.
Who was that, Jim?
Yeah.
You jerk. You stole my thunder. That's exactly right.
Listen, I'm just giving you an attaboy. Somebody's got to give you an attaboy. I thought I'd just jump up there and say attaboy.
Nobody ever does, man. Jim, you nailed it, bro. That's the options guy talking, man. Folks, listen to him. There's the VIX. The VIX got smashed. It was 50, record. It hadn't been this high, I don't know, months, and then this is that's everybody saying it ain't going to be a hurricane, folks. If this thing was going to keep rolling off, now we're flat on the Dow or the industrials. This would have happened. So this is a great canary in the coal mine that Jim's talking about. So, all right, folks, let me. That was a long rant. Let me get back to Anka here. So Anka, and saying your minute by minute, day by day type of thing, looking at stuff this week. What else is on your radar? Economic events, political, fundamental, technical. What's on your radar that's making you, with your 0.5 delta, say we're either going up or going down?
Well, like I've mentioned before, I'm going to take it one day at a time because I think we are in a difficult environment. And I'm looking forward to tomorrow's consumer confidence that is coming out at 10 o'clock and also Thursday. And these are going to be the only major events, only market movers that I see for this week. Thursday, 8:30, we have the final GDP and unemployment claims. And this is pretty much for what I'm going to be looking for, clues as to day trading parameters. And like I said, this is, for me, at least, this is a day trading environment and not by far a swing trading environment, because I don't have a clear direction as of so far. So we've had the market topping out. We've had only one lower high that we see in the SPX right here. And I can try to share my chart. Okay. I guess you guys can see it now. All right. So these are the levels, and this is the reason why I mentioned the fact that I am 50-50 on this whole up or higher or lower. I think that if we break this 2360 level, this is going to come with a confirmation for the upside. We also have here this area of resistance that is coming from this pivot low, and we do have these two trading sessions that kind of topped out of in this area, 2360. So with me, I'm going to wait for more price confirmation. If the price should continue higher, 2360 is going to be my breakout area, and this is where I'm going to look to go long. I'm not really going to be a bottom picker just as of now. I'm going to orient my trading to a day-to-day trading activity, so day trading primarily and not swing trading, trying to stay away from swing trading. However, we've been talking about the SPX, but keep in mind that if we take a look at NASDAQ, and if we take a look at NASDAQ and actually NASDAQ futures that I can pull up right now, they're much stronger than they're really literally much stronger than all the other indices that are out there. So we can see them bottom out right here, very close to 5,300 and pop. And that's because a lot of the NASDAQ stocks are still holding up really well. Looking at stocks like Microsoft, I have a core in Microsoft. So I do believe that the stock is going to continue higher. eBay is very strong. PayPal is very strong. So we do have a lot of elements that are holding on really well into the the NASDAQ. So the SPYs are actually weaker. And also the Dow is a little weaker. And as of this morning, actually Dow had more relative weakness into it than the S&P 500. But all in all, these are the elements that I'm looking for. And then again, come April, we're going to start earnings season, and we're going to start having numbers coming in. We're going to start with financials. We're going to start with the text in the first 2 weeks of earnings season, and I think those are going to power, and they're going to have a say. And don't forget, we're really going to get closer to that tax reform, and I think they're going to be like bumping head to head. It's going to be tough. It's going to be a very tough trading environment, and I think that the best way to do it and have a stable plan and take it very, very slow. I don't think this is the time to be aggressive and overly aggressive in the market. I think that, sitting on cash is a very good alternative to being aggressive.
Mm-hmm. Okay. That's good. I tend to agree. That was a lucid and well thought out argument. Jim, what's on your radar for this week for the up to 23, 50, 60-ish and then roll over?
Well, we've got economic reports on the consumer as far as income, sentiment, and a bunch of other things. And then we also have real estate news out there coming up with mortgage applications and pending home sales. And then Thursday, I think, is a big important day. It's going to have corporate profit information. It's going to have the GDP. And basically Friday, they're going to also give you the purchasing manager report. So there's going to be enough out there for people to get a tone of what the current numbers that they just are coming off of are going to look like. But there are three areas that are very important as I see it. The 50-day moving average, you guys were talking about a little bit, 23.22 on the S&P. We did break through it. Now we're above it. The 10-year note down to 2.3. If that were to break that area, there's gaps under 2.2 and 2.0. And then the dollar's at 98 and 99. If it were to break under the 98, 97 area, that would be a pretty big thing as well. So we're right on the ledge, and they're not getting rid of the FANG stocks, Facebook, Apple, Netflix, Google, and Amazon included. So obviously there is still a belief that all these levels I'm talking about right now are going to hold, and we are going to rally out of here. But it is important to note that if it did break, the yield on the 10-year may very well go down. And if it does break down on the 10-year note, I think would have to be accompanied by a sell-off in stocks. But we're going to know a lot more. As long as that dangling carrot is out there with tax reform and people are fantasizing how big it's going to be, it is difficult to get the thing to go down appreciably. But if any news were to come out that they're not going to get something through or anything, like Whiz was saying, it's going to be a tough racket for stocks. But those levels that we're on right now, 2.3, and 23.22 on the S&P, very, very important that they kind of hold up and don't get thrashed.
It's a great point, Jim. The FANG stocks are hanging in there, and it's almost like they're taking over the market as opposed to the financials for the past 3-4 months since the election. JP Morgan, Morgan Stanley, Goldman Sachs, even AIG is starting to show some life, got airborne, and now the air's coming out of the financial balloons, but the FANGs are holding tight. And if anything, I think it's I was telling my members this last week, I think it's a BTFD moment. It's a buy the effing dip. And if we don't buy this dip down to the 50-day moving average, look out below. Jim, as you know, as an options trader, we can pound this thing into the deck. We don't care which way the market goes, up, down, or sideways. And we can do it. So that the strength in the tech stocks, I think maybe there's a little, let's just call it sector rotation, maybe out of financials into, first of all, folks, Goldman Sachs ain't going out of business. Now there's 5 people, 2 in the cabinet and 3 heavies. From Khan to Mnuchin to the new deputy Treasury Secretary. I think we have a Goldman Sachs put under that trade. So yeah, Jim, couldn't agree more. Kurt, what's on your radar for the week as far as you're 100% going down, which of course you're wrong about, right?
Well, just to, I'm going to share my screen here. I mean, as far as economic news goes, I mean, there are things which Anka, Jim, they already mentioned, but at the end of the day, it's one of those things that will be justified one way or the other to appease whatever direction they want to take it. So It's not to say I'm ignorant to the news, but I don't put as much weight on it ultimately in terms of justifying, okay, why is it going up or down? But looking at the S&P here, we had this break down on Tuesday that broke that ascending trend line support level. And then we came down to the 50-day, which we've all already discussed. Today, gap down, it's been rallying. So, if we close like this, yes, the daily chart's going to look bullish. It's going to look like it can move higher. But if we zoom in a little bit and take a look at the hourly, I mean, this is really nothing more than a rally into this resistance from, that was created Friday and Thursday afternoon. So the real level to get above, if we're going to say we go higher, is going to be this 235 and a quarter area, right up here. I mean, that's really going to be the area you need to clear. If it doesn't, then like I said, I believe that we do continue to move lower, and would even go so far as to say today's rally gets completely, maybe not completely erased tomorrow, but that process begins to erode maybe as we head into this afternoon and tomorrow down into the end of the week. So that's kind of where my thoughts are and what I'm looking at, and we'll see how it plays out.
It's a good point, Kurt, that if you step back, it looks like it is a little bit of a bounce off the 50-day or rally. But when you put it that way, hey, this the support, or the somewhat support, is now a little bit of a resistance. So same thing, if we head up, if we get a vertical climb through that with airspeed, then I think people are going to BTFD and say, wow, now it's time to start picking on things that really got slammed last week, like financials. But if that support becomes resistance and we kind of do the rollover like Jim was talking about, then it's STFD, I guess you could say. Okay, Stefanie, what are you looking at this week? Big on your radar that's driving your up and down like Jim?
All right. Well, I like what Kurt had to say. I totally agree with those charts. That was great. Let me just share my screen once again. And okay, great. Okay. So we just had a 30-minute upthrust, by the way, while we've been chit-chatting about the market. We just had a 30-minute upthrust, which is, it's a Wyckoff. It's a bearish technical chart. Let me just switch to 30. Yeah, there we go. You can kind of see it here. But we upthrusted right on that dark pool level. So that's really key. And it's how we close today. They're going to try to paint the candle throughout the day. They could try to make it into a hammer, which it's not. But if we close negative and weak, everybody here is probably going to turn a little bit more bearish, right? So that's really the key to see where we close today. But here's what I have as far as specific sectors. I have emerging markets. For those of you that trade emerging markets, EEM, there's been massive dark pool trades at $39.47. And this was last week. So I've been really waiting patiently. Why hasn't it gone up and broke up through 40? So, a lot of times the dark pool sells. They have a lot to sell, and they're not going to move it down until they're done. So if we close below 39.47, I'll definitely be shorting the emerging market sector. But as long as we stay above this blue line that I've drawn, I'll be bullish. But patience is really, really key when it comes to trading. For those of you that are trading oil, ExxonMobil had a massive trade today at 81. So I'm really watching to see if we can hold this 81 level with oil. Everybody wants to know, is oil bottomed out or not? I have no idea, but I'm going to definitely watch that level. It's always about a level. I don't pay attention to the news. I don't care what's going on in the universe. I only care where the big boys are trading. Now, bonds, everybody's watching the ZB, the 30-year U.S. Treasury bond. We had massive volume today at 151.25. So watch that level. For those of you that are trading gold, here are the massive levels on gold. IAU, the iShares Gold Trust. In the past, we had massive selling at 1209 in the past. You can see we came down. We retested that dark pool level. Looks like they could still be selling. We really have to break above and close above that level for gold to rally higher. Also watching GDX. 2350 has been a massive level. If we can close above that, gold has got a lot of room to run. And copper, last but not least, love copper. We had a pretty big print today, trade at 12.20. This has been just getting smoked. So watch and see if we can close above that 12.20. If we can't, then still bearish. If we close above it, then I will start to turn bullish. And those are my levels.
Sounds good. Love it. All right. So we covered, David, what's question 4 there? Go ahead and scroll up. I don't have my report in front of me. I think we have one more. Oh, this is a good one. And then we'll get into my favorite, which is give me your good trade for the week or a longer term trade. But let's knock this one out real quick. Question 4, Anka, what methods or techniques do you use to overcome the emotional aspects of trading?
I think one of the biggest things is to respect your trading plan and correlate that trading plan with the market environment. I think it's key. And I know that a lot of educators, and when you first start trading, they tell you, oh, you know what, you should have a trading plan because, trading is so personal and everybody should develop their own trading plan. Well, I highly disagree with that. And if you're a successful trader and if you put your money where your mouth is, you literally give out your trading plan because this is what traders are looking for. They're waiting to shorten their learning curve. They're not institutional traders. They're not professional traders. They just want to learn how to trade, and if they decide to follow someone and they decide to have a mentor, then you are responsible for their success. And I think you are responsible for their success overall, no matter what the outcome is. But more so, you have to provide them with your trading plan. They need to follow the footprints of a successful trader. And having a well-written trading plan is imperative. And I also provide that to all my traders, whether they're swing traders or they're day trading futures, because for those of you that know me or don't know me, I day trade futures and I swing trade stocks and ETFs. And I have been doing it very successfully. I have proven track records for the last 7 years at least. And one of the key ingredients here is not only to have a really well-written trading plan, but a plan of action of what you need to do on every stage of your trade. Let's say if your stock or your M&E or commodity reaches a certain area, you must need to know what to do, how to react in that area, and you should not let emotions come your way. Even if you have, let's say this morning, for instance, I had 2 trades that have stopped out. So what was my plan moving forward? I just stopped trading because I did not have I did have my trading plan that was put into action, and that limited me from taking another trade. So that was a plan of action. Also, swing traders, maybe you don't have a hard stop in, and maybe you want to give that trade, let's say, a little bit of room, or you have a severe gap down and you don't have a stop. What do? You have to have a real trading plan. And not only that, but you need to have a damage control plan. And that's also part of your trading plan. And that alleviates big part of your emotions. Knowing how many trades to take depending on your risk capital, knowing what your risk tolerance per trade is, knowing what your risk tolerance per day is, knowing what your risk tolerance per week is imperative. These are very important elements for your trading plan. And I think that all in all, having a well-written trading plan is the way to go. It will alleviate emotions. And let's not forget, what are emotions? Emotions are the most precious commodities, right? Because you're dealing with money. Money is the most precious commodity. And when you're dealing with money, you become emotional because your capital is at risk. Remember, when you decide to push the button, that is the only time when your capital is at risk. When you're in cash, you have no risk. Okay, so when you push the button, when you decide to push the button, you got to make sure that you have a plan. You have a plan for your entry. You have a plan for your stop. You know where your targets are before you get in the trade. I think you're going to,
yeah, I think you're going to get 4 or 5 other vertical head nods here. Jim, what do you think?
Yeah, well, I think A lot of that's true, but my feeling on it is that knowledge is power. And so with the option professor DVDs that we put together, you get an understanding of how all the different strategies work. And then you can try to quantify what strategy is right for you, because none of these strategies is right for everybody. And you can use different strategies for different purposes. Like say a stock jumps way up, right? And it's gone on a big run. You're not real comfortable about holding all this gain. So maybe you look to switch into a call option where you'd have limited risk from there on out, and then bank the rest of the money so that your cash risk goes from maybe $50 a share to $3 a share by switching into a limited risk call and then seeing how the movie ends. Or maybe you go, I really don't want to sell it out right now, so why don't I just put a married put in? I'm up $50. What's going to kill me to put on a $3 put to insure it? Or selling out of the money call, generate cash, use their cash to buy the insurance. A lot of moving parts in options. And that's why the DVDs come in handy, because, I think the anxiety comes from an unsuredness about what to do next. And, if you can take your cash risk and either reduce it, or you can take your cash risk and hedge it, the anxiety monkey is off your back, and now you're down in Fort Lauderdale having a good time at Los Olas with Whiz. Is that a view? Is that a dream? Or what do you think?
It ain't a dream, man. It's definitely doable. Come on down.
That's what I'm thinking. I'm thinking, you become more knowledgeable. You know how all these different things work. Then you look at your situation, and then you try to get the anxiety monkey off your back. That's the way I think.
Love it, man. Sounds good. Kurt.
Yeah, I mean, I would definitely agree. Knowledge is power, and you have to go through it before you can really start figuring out what you're going to be comfortable or confident in. I think one of the biggest disadvantages that traders expose themselves to is not giving something enough time. If it doesn't work for them right away, they figure it's not working, and they're just going to move on to the next thing on the list. And again, that is only going to hurt them in the long run, because part of the reason certain methodologies might not work for them in the beginning is because they haven't given it enough time to become confident in it, right? I mean, I can't give you, at least in my opinion, I can't give you my plan and you execute it the same way that I do, because you're not confident in it. You don't have the same beliefs or risk tolerances at that point to know, okay, this is a normal pullback, or this is what should happen. I mean, maybe you get a nice big pop higher off of a long trade and you just immediately book the profits instead of waiting for it to continue giving you more, right? And that could get you hurt in the long run too. You might take quick profits, but if then you're going to get stopped out on the next trade or the next trade after that, you could be down on the day. So there's so many different variables that go into the emotional aspect of trading. And quite frankly, I think we could talk about this one topic for this entire session. But it comes back down to knowledge, having a set of rules that you're going to follow, and trying to declutter the charts as best as you can, right? Just looking at what drives movement, fear and greed. So you don't need all these different indicators on the chart, because at the end of the day, those indicators are going nowhere if price is just going sideways. And so that's what we all need to understand and try and, be within ourselves and objective as to what's going on, rather than thinking about the money, rather than thinking about what somebody else said about this trade, and just focusing on what is happening right now.
Love it, Kurt. Man, that's the icing on the cake. And Stefanie, what can you add to this as far as how do you overcome those emotional aspects?
All right. Wow. So I was a major in psychology. So I definitely have a little bit of an advantage when it comes to trading, because it really is a lot about psychology. But this is the question that I think everybody should ask themselves that's listening in. Did you paper trade? Did you paper trade for a year before you started trading? Did you paper trade for 2 years before you started trading? Did you paper trade for 4 years? right? We go to college to get a degree. I mean, we study for 4 years to get a master's, and then we may go for another 2 to 4 years after that, right, to become a doctor, a lawyer, an engineer. But most people go into trading like the first day of class, and they just start trading their money away. They're gambling. And I think that's why emotions come into play, because, 90% of traders out there are gambling. They haven't trained for this. They haven't experienced it. They haven't learned how to really trade. They're guessing, hoping, praying, listening to one analyst on TV who's bullish on something and they buy it, listening to another that's bearish. And by the way, I put some puts on the SPY on that up thrust when we up thrusted to the dark pool. I'm risking 13 cents on this trade. But again, there's no thinking. I know exactly where I'm going to be entering. I know exactly where I'm going to be exiting based on levels. It's all mathematics. That's all trading is. It has nothing to do with emotions. I don't think about money. I get pissed off when I lose my discipline. That's what pisses me off. When I should have got out, I didn't. It has nothing to do with whether I made money on the trade or didn't. Because eventually you're going to get wiped out. And I love running a live trading room, because I'm actually trading live. I'm teaching live. I'm showing my traders why I'm getting in, why I'm getting out. And I teach them that it's okay to lose a couple of pennies on a trade. This is healthy trading. I lose 4 or 5 cents every single day as a day trader to make 20 to 50 to $1. As a swing trader, I may risk 20 cents to make $1 or more. But this is healthy. And a lot of people out there don't think that they should lose on any trade. They freak out. They take it personally. And so you have to separate yourself from the trade and map it out. Before you get in, you need to know where you're getting out. So I'm getting out on half of this trade on the SPY if we can come down to 233 level. So, again, I'm already mapped out the trade. I knew where I was getting in based on the dark pool. I know where my exit is on my target. I know where my exit is if it goes against me. If it closed above that up thrust that I showed you, I would have got out with just a couple pennies shy. So, this is real trading. This is professional trading. And take a step back. If you're listening to this program today, and, I'm sick of, people losing money. I hate when people lose money only because they don't know what they're doing. Okay. So take a step back, treat this as a profession. If you were going to go to college for this, you wouldn't just start trading. You would go to many classes. You would sit in classes. You would learn. And then after a couple of years, after you've learned it, you've seen things work. You have to see it work over and over and over again to have confidence in it. And that's really key.
Stefanie, I think you nailed it. And especially with the paper trading. I mean, that's, folks, if that would be like me reading a book on aerodynamics and walking right out to the F-18 and trying to get airborne. I don't even think I'd be able to taxi the airplane, let alone get airborne. And if I did, I'd be dead in 5 minutes. You have to go hit the simulator building. We get a ton of time in the simulator building before you ever go out on the flight line and smell Jet A and strap on an airplane, folks. So absolutely have to pay per trade. But Stefanie is right. People think like, well, I'm starting to learn how to trade, so let me just throw some real capital at this thing right away. And that you deserve every dollar that you lose right in your face, because it's stupid. Who was it? Sergeant Stryker in the Sands of Iwo Jima, John Wayne. He's like, life's tough. It's even tougher if you're stupid. We have a proprietary 7-step trade plan at TGO that literally came from the cockpit to the trading pit, from determining your strategic mindset all the way out to your exit criteria. Folks, before I ever squeeze the trigger in combat or on a real trade, I know exactly what I'm getting out for max profit, when I'm going to adjust the trade if it moves against me, or eject for minimum loss. So all of those things take the emotion out of it. Because I bump into a lot of retail traders across the country when I'm speaking, and they look at me with just a blank look on their face when I'm like, "Oh, that's great, you're up this much. When are you getting out?" And we get the officer shrug there, which is bad. So having that 7-step proprietary trade plan, step 3 in my trade plan is a very important step. It's called commit criteria. Before I ever got airborne and pointed my nose down range at bad guys, say a flight of MiGs, they had to hit certain commit criteria. They're pointing at me, they're climbing, and I know they have, through some secret squirrel sources, XYZ missiles on them. Well, now I'm going to commit my airplane and my wingman on that thing. Why are you committing capital to the trade? I call it the cocktail party pitch or the elevator pitch. If you bump into somebody at a party and, hey, I'm in this Apple trade, and they go, why? If you can't spit out immediately 3 to 5 sentences as to why you're committing capital to that trade, and at the end of those 3 to 5 sentences, I don't go, I'm an idiot if I'm not in that trade, then you shouldn't be in it. And anytime that commit criteria change, get out. It's interesting because people have this great commit criteria. 2 to 3 weeks later into a trade, it's changed, and they're like, "Oh, geez, well, Apple will come back. Apple doesn't hate me, folks. Apple would steamroll over your house if they could. They don't even know who you are." So, commit criteria, having your exit and exit points for max profit or min loss are absolutely key. And I can hook you up with one of those trade plans at TGO. All right, running out of time, guys. But let's go top to bottom real quick, because I always love this segment in here. Anka, give us a trade that you're liking for the next minute, hour, week, month, or 10 years. That would make our mouth water.
Okay, so there are actually 2 trades that I'm looking at right now, and I'm going to share the screen. Okay, you guys should be able to see it right now. So we've seen the market pull back. We've seen the Qs pull back. We've seen the SPYs pull back. So we've seen the overall market Dow pull back. But yet, this stock has not pulled back. This is Cisco right here. And it has tested the support. And once again, traders today bought it from this bottom right here at 33.75 area. And I think that this has the potential for a breakout. I really don't like the fact that the price is so coiled at these highs and did not pull back even more, or it did not form a wider range, a range that would be more tradable. But at this point, I see this as a breakout over 34.50, and it has the potential to run to 36.50, 37. These are my projection target levels for medium and long term. And also, if it breaks below, so this is a 50-50 shot. If the market will be weakening, remember, even strongest stocks are going to drop, but they're going to be the last to participate in the rally. In the drop, I'm sorry. So if the stock should break $33.75, we can see a steeper correction all the way into the $32 area. So I'm going to be looking at both facets of this coin, either long over 34.50, and most probably I would place a stop below 33.75, or short 33.75 with a stop over 33.50, and I'm going to be looking to lower my stop as soon as it triggers. Same thing for the upside. So I'm going to look to bring my stop up as soon as the trigger should happen. And another stock that I have on my radar is FEYE, that is getting, so these security internet companies are seeing a little bit of price action activity. I actually like, these are just 2 ideas. I like the fact that the price is stabilizing into this area of support here. I think we might be able to see a trend reversal. It is too early in the game to see that. However, I see $12.11 as support, and if we break through $12.50, this is going to be my go-ahead buy at this area. And I see targets all the way into $13, $14, $15, and moving higher with a very small risk to reward ratio. That's it.
Very nice trades. I wrote those down. Jim, what do you like in nowadays?
Well, just a couple of things that I was suggesting is on the educational front. On March 6th, when I was here, I discussed how a lot of markets were range bound. Stocks on the S&P, 2,400, 2,350. Yields on the 10-year, 2.6, 2.3. Gold, 1270, 1200. Oil, 55, 53. And soybeans, 1110. Some of those ranges have broken since the beginning of the month, and some are in the process of possibly breaking. And so I've been suggesting people learn a couple of strategies right off the bat. One is the strangle strategy, where you have calls and puts at the same time, and the another is the collars and the married puts, particularly as I talked about financials, because from the 200-day moving average to where JP Morgan, Wells Fargo, Bank of America, Citigroup were trading, Goldman Sachs, a lot of real estate between the 200-day and earlier this month. So the concept of the collar would have been a heck of a thing to be aware of. So I suggest that's number one. Go to the Option Professor site and try to get the DVDs. Second thing is, it is very good to be open to other ideas, other strategies, and knowledgeable people. So I'm inviting everybody to a Thursday webcast that I'm having that is going to make you aware of what advisors, guys that are actually trading millions of dollars in the marketplace, how they're doing things like short-term option trading on the E-mini S&P, weeklies and monthlies, and how guys are trading contracts using proprietary models for their exit and entry levels. So everyone here is going to be invited to the webcast. All you need to do is go to TradingAdvisorAlerts.com. That's TradingAdvisorAlerts.com, and you can also pick up a copy of the Mastering the Art of Probability. So that's my suggestion today.
Awesome. Kurt.
All right, I'm going to actually bring up my screen here. And while I'm doing that, just going back to the whole emotion conversation, I think trading plans are important, but at the same time, I think that traders struggle with where to begin. They think that it's got to be quote unquote perfect. And what I like to tell traders is that your trading plan is very much a living, breathing document, and it's going to evolve as you experience new things, see new things. And so start with something, even if it's just, I'm going to buy a pullback into support, and then you can work out the details from there as you paper trade, learn, go through the steps, but just get something down, because I think, as I said, traders just look at it as this insurmountable task that's very difficult because of how detailed it needs to be. But just start somewhere. And the other thing on that concept or idea is one of the things I like to do is say, let the trade take you out. So not to say you shouldn't know where a certain trade can move to in terms of targets, but instead of just getting out at that target, have a trail stop in place instead. Because how many times have we seen trades come up to a targeted area only to then get momentum and blow through it, right? So I like to say, let the trade take you out rather than you taking yourself out of the trade. And so with that said, the two ideas here, one is BABA. This finally has cleared this 105 resistance, closing above it. I think there's really nothing clean about it at the moment, but looking at the weekly chart, it's got this prior high around 110 to deal with, which I don't think is a big issue, because we've spent the last several weeks, really beginning of this entire year, going sideways away from it. So I don't see this as being a major issue. Beyond that, I think we can go well higher. So this is something I believe could be a weeks to months type of long idea. And then also looking in the Forex market, which I do also trade, I've been watching the US dollar yen just recently breaking down under a key support level with plenty of room to continue moving lower. So this is one that I'm going to be keeping a close eye on to the short side as we move forward over this week and even into next week.
Awesome. Sounds good. And Stefanie.
All right. Well, I kind of jumped the gun earlier, and I gave you like 1, 2, 3, 4, 5, 6, like 7 trades earlier. So I know we are, pretty much almost out of time here as well.
I'll tell you what, Steph, why don't you start the wrap up then with how do we get a hold of you and start following what you do?
I was just going to do that. I was like, what? I have to actually do a meeting in my trading room right now. They're waiting for me. But yeah, if anybody would like to come join me in my live trading room, just go to www.thestockwhisperer.com. You could try it out. 30 days. It's only $9.95 for a 30-day trial. This way you can see, you're either going to love it and say, where have you been my whole life? Or you'll say, it's not for me. And I totally respect that. I'm really looking for great traders to join my community, as well as new traders that want to learn. We trade stocks, options, futures. Some of my traders trade Forex. We trade a little bit of everything, but we trade around the dark pool. So if anybody has any questions, feel free to email me, Stefanie at thestockwhisperer.com. And thank you so much for having me on today.
You bet, Steph. You're cleared off, and have a good day trading.
Thank you.
Anka, how about how do we get a hold of you and follow what you do?
You can find me and at info@tradeoutloud.com, and mostly if you would like to get educated into how to trade futures, how to day trade futures, and how to swing trade stocks, you could visit my website for more information on that. If you are an educated trader and you have been trading for a while, so you know what trading involves, I have two services. I have a futures signal service, and I also have a swing trading service for stocks. The future signal service is $199 a month. And also the same for the swing trading service for stocks as well. We focus primarily on the S&P 500, the Dow, NASDAQ. We trade gold and oil. We also have trades in the Russell, dollar index, bonds, and silver. And this is pretty much our focus. And we also have this swing that is going on right now. And this is, I know we're running late, but we also have this potential idea for those of you that are swing traders and for those of you that are watching swing trading in futures as well. Coco is setting up for a trend change. Is really appealing channel. So follow me. You can follow me for more trade ideas on my Twitter account. It's twitter.com/Anka Metcalf. And other than that, looking forward to hearing from all of you.
Awesome, Anka, and hustle down here. Jim.
Yeah, just real quick, on Thursday of this week, we are having a webcast, and it is going to be at you can register for it at tradingadvisораlerts.com. That's trading singular, advisor singular, and then alerts.com. And as I was saying, I think it's important to remain open to all different types of strategies and different ideas. So this is a way of looking at some of the traders that are working with E-minis on a weekly and a monthly basis, and how they're trading the options, and also how some of the guys are trading contracts using their proprietary models. So again, that'll be this Thursday, and to get registered, you go to tradingadvisораlerts.com. Thanks, Whiz.
You bet, Kurt. I'm sorry, Jim. Kurt, you're up.
All right. So yeah, like I said, T3Live.com. You can go to the website and see all of what we do. Get signed up for whatever interests you, or if anybody's got any direct questions for me, Kurt at T3Live.com. I'd be happy to help you out with anything you might need, or point you in the right direction. So again, T3Live.com, and you can see what we do.
Awesome, Kurt. Thanks for coming today, my friend. And for me, folks, it's easy. You can just go to topgunoptions.com. If you're a skier, this will look familiar. Just scroll down, beginner, intermediate, advanced. We have everything from weekly options to retirement portfolios to porridge right in the middle, where we trade the front months and then all the way out to the back months. Might do a webinar for our folks who attend today, maybe on Thursday or Friday. If you want to come have a little bit more detail what we do here at TGO. I really like the financials here. Loved them before the election. Obviously, they got way over their ski tips up here. Also like a Brazil trade after a big meat fiasco last week. So we're going to be talking about all this stuff tomorrow morning at 10 a.m. If you want to take a 2-week test flight for, I think it's like $14, $28, or $38. If you want to do weekly options, you can do that right off our homepage. So, all right, folks, with that, I'm going to throw it back to David and say, David, thanks for having me once again, my friend. And I look forward to hosting again sometime in the near future.
Yeah, definitely. All right. Thanks, everyone. Great show. For everyone watching, be sure to hit the YouTube subscribe button if you haven't yet, to make sure to get updates on future shows. We just crossed over 500 YouTube subscriptions in the last week, so that's a good milestone, and we have almost 11,000 active subscribers now to Timing Research. So if you haven't had a chance to take a look at the report, be sure to go to TimingResearch.com. You can also watch any of the past shows there. And I've also been making the audio of the shows available for the last few weeks in MP3 format, so you can listen in your car or at the gym or whatever. Be sure to join us next week on April 3rd. We're going to have Simon Klein, Andrew Keene, and Rob Hanna. And finally, just want to thank all my guests again for this week. Anka Metcalf of TradeOutLoud.com, Jim Kenney of OptionProfessor.com, Kurt Capra of T3Live.com, Stefanie Kammerman of TheStockWhisperer.com, and of course, Matt Buckley of TopGunOptions.com. Thanks, everyone.
Thanks, David. Appreciate
Thanks,
it.
David. Yep.
Thank you.